How's it going, YouTube? Welcome back to another video with the House Money Investing channel. In today's video, we're going to go over the Acorns account. If you like this type of content, please hit the like button, subscribe, hit that bell, follow my journey. I do have 12 brokerages with 100% transparency, showing all my gains, my losses, my deposits, my withdrawals. I do analyze stocks 7 days a week, so I'm constantly giving out good stock picks for you guys just about every day. I also go over stock news, price movements for the day. Here on this channel, I do what I call the House Money Challenge, which is deploying capital into the market for a set number of days, pulling that capital out, leaving only gains in the market. So basically, all the stocks I acquire will be riding on House Money. I started this challenge back in June, and I've accumulated over $12,500 worth of free shares. My portfolio is currently valued at about $41,000, and I have well over 1,200 stocks. I do have links in below if you want to get some free stocks. You can get four free stocks from Webull, valued up to $3,700. You can get a free stock from Robinhood as well as moomoo, and you can get $33 from M1 Finance. So let's jump into it. First, I'll show the IRA. It's the smaller portion. It's only a $60 account. And over the last month, I'm up $2.85, up 4.98%. Over the last 3 months, I'm up $6.81, up 12.8%. Over the last 6 months, or all time, I am up $9.01, up 17.6%. So percentage-wise, the portfolio is doing very well. And then we'll take a look at the bigger account, which is valued at $2,272.92. Over the past month, I'm up $80.57, up 3.67%. Over the past 3 months, up $209.83, up 3.2%. Over the past 6 months, I'm up $244.85, up 3.51%. Over the last year, I'm up $151.76, up 2.15%. All time up $153.92, up 2.8%. Opened this back in May of 2019. As you can see, I was just slowly adding to it. And the reason why my gains weren't that big is because I had my portfolio set on on conservative, which if you look here at conservative, the pie is mainly just bonds and treasuries. As you go up, you'll start getting exposure to large cap, mid cap, and international stocks. The further you go up, the more exposure you get to those large cap, mid cap, and international stocks. As you can see here, you have no large cap. Here you have 24%, then you have 35%, then you have 47%, then you got 55%. I currently see how to set it on aggressive, just because you're going to get the best bang for your buck here. You're going to have your small cap stocks like Wingstock. Then you're going to have, which is 5%, 10% is going to be into mid cap like Etsy. And then you're going to have 30% into international companies like Nestle, Alibaba, Tencent. And then in your large cap, which is going to be basically VOO, ticker VOO, which is a Vanguard fund. It's going to be like Microsoft, Apple, Amazon, Facebook, Google, Class A and Class C. So that's where you're going to get your best growth. And in my opinion, it's a safe play because these are some of the biggest tech companies in the world. So definitely, great there. I do swing trade out of this account, which basically, as you can see, is my graph has a spikes in it. I deploy money in here, let it sit for a couple months, maybe 2 or 3 months, and then I pull out my principal and I just leave the gains in. So going back here, we'll see we'll have around $500. I put in like 400, made it to 900, and I took out the 400, and I still had around 500. So I didn't really make, nothing but maybe $10 or $20, and that was because my tolerance risk level was pretty low. So here we got $500. We put in $3,100, right? We were sitting at $3,600. I take out that $3,100. Now we got $600. So as you can see, I made a profit of $100. Then I do the swing trade again from $600 all the way up to $2,100. So we put in 15, took out the 15. Now we got 700. So we made almost $200, about 130 bucks off that swing trade. And I'm currently in the process of pulling out my gains now. So I have maybe $700 in here. So I put about $1,500 in here. I'm in the process of pulling it out now. Then we'll look at the account breakdown value. In the dollar amount, this is how much I have in each portion. I got $1,200 in large cap, $200 in mid, $100 in small cap, $680 in international. And then percentage wise, I got 55% in large, 9% in medium, 4% in small, 29% in international. And this is the amount of shares I own of each. So I own 3.55 shares of VOO, 0.92% shares of medium, and then 1.12% of small, and then international 9.64. And this will kind of show you, what I've made off of each. These are small caps. So over the past 6 months, I'm up $30 on it, up 42%. And this will kind of give you more exposure to what I have here, like Fox. And then we'll take a look at the medium stocks, up 33%, up $61 over the past 6 months. And these will be some of the shares as well. Colgate and Etsy. Then you got international, only up $12, up 21% in the last 6 months. You got Alibaba, 10 cent, and some of the others. And my favorite one, of course, is the large cap, which is up $54, up 18%. So the ones I already called out were Microsoft, Apple, Amazon, Facebook, and Google. Then you got Johnson & Johnson, Berkshire Hathaway, Procter & Gamble, and Visa, which J&J, Visa, and Procter & Gamble are going to be your nice dividend payers. Apple does pay a dividend, but it's very small. Like Johnson & Johnson is a dividend king, so you're going to get the best dividend from them, or a guaranteed dividend. So that'll be pretty much the Acorns portfolio. We'll see if we can see. Yeah, I've made $22.93 so far in dividends. And as you can see, I've vested $7,000 and I withdrew just about $5,000. So yeah, that'll be the Acorns account. I used to didn't like Acorns. That's because I didn't know how to use it. I didn't know how to set the risk tolerance. I didn't really know what I was doing back when I started Acorns. But now that I know the aggressive is the best way to go. Me personally, I change it every 3 months. I just go up and down on that scale. Just a personal preference, just to mix it up. And the reason why my gains aren't as good for the year as they are for the 6 months is because right when the pandemic hit, I actually scaled it up to aggressive. And then right after the pandemic, when the stock market started going up on a boom, I actually went right back down to the very conservative, right back to the bonds and treasuries. So I didn't get that big gain that everybody else seen in the market in this particular account. And that was just a mistake on my part. But yeah, that's the account. If you guys like Acorn, take a look into it. They also have this potential rating. And hypothetically, based on my investment, if I just let it sit here, by time, let's say you retire at 65 or 64 and a half, my $2,000 will be worth $13,000. And it's got a scale, all the way down, kind of give you a projection. The more you put in, the higher it's going to be. So at age 76, it'd be $27,000, which isn't much money. So of course, I'm gonna keep swing trading this and adding to it and building to it, maybe $100 or $200, in gains every 2 or 3 months. But yeah, that'll be it for this video. If you like this content, please hit the like button, subscribe, hit that bell. I appreciate you guys for tuning in.